What is good, you guys? We are back with a new lecture, and this lecture is going to be on the PSP, a very important concept that helps you understand or align yourself with a new phase of price, such as reversals or continuations. Now, before we start with the PSP, we need to understand some of the basics in order to build on top of that. The first idea we need to understand, or the first concept, is correlation between the assets. And as we said on the last lecture on SMT, we said correlation between assets is when assets such as NQ, ES, and YM create the same structure. What do I mean by that? I mean, look at this asset on the left, going higher, going lower. The other assets, correlated assets, going higher, going lower, going higher, going higher. You see, that is what it means for the assets to be correlated. They move or they create the same structure. But what is Kraken correlation? We said Kraken correlation is when assets show different structure. What do I mean by that? Well, you see this asset, as we said, going higher and then coming lower. Same thing on the other asset. But if you notice here, this asset on the right creates a new low. But this asset does not create a new low. So this asset sweep of the low, which makes this a new low or lowest low. But this asset fails to do that. And once we get this kind of cracks in correlation, meaning they are not correlated anymore because this asset created a low and this asset did not. And that gives us the crack in correlation, meaning that we are going to have a new phase of price. And the price is going to start going on a new phase, which is an expansion. And we said we showed the cracks and correlations in two ways. SMT, which was this one, and now we are going to use or talk about PSP and how to use that to find the new phase of the price. And you might ask, why do I need PSP? Because I already have SMT that shows me the new phase of price. Well, this is the same concept. Sometimes you do not get a SMT, but you get a PSP. And that can help you to, instead of missing your trade because you do not have a SMT, but if you do have a PSP, that is going to help you to catch the trade that otherwise you would have missed. Now, in this right here, if we wanted to compare the SMT, well, if you have a price going higher and then after sweeping a relevant level, you get a SMT. If you understand the SMT, you know that you are going to have a new phase of price, and then you can align yourself with that. But what if you don't have SMT? In that case, if you have a PSP, same thing applies. You don't have any SMT here, but you do have a PSP. Now, if you do have that, that means that you can trade even if you don't have the SMT and get into the new phase of price. All right. Now let's see what the PSP actually is. PSP stands for Precision Swing Point. The name is too much, but it is very simple. PSP. Now, PSP is when we have a swing and one of the candles on one asset has a bullish closure and on the other asset it has a bearish closure, meaning that right as the swing is forming, one asset closes bullish, the other asset closes as a bearish candle, and that is PSP. If you don't understand, don't worry, we'll go over it one more time. On the left, asset A, we have C1 and our C2 after sweeping the high of the C1 closes as a bullish candle, and on the assets B we have the C1 and then the C2 close also sweeps the high of the C1, same as this one. But if you notice, this candle closes as a bearish candle, bullish on the asset A, bearish in the asset B. That is our Kraken correlation, meaning that if these assets were to be correlated, then this asset should also close as a bullish candle because they are correlated. But if we do not close as a bullish candle on the asset B, that is telling us that it is a crack in correlation and you can anticipate a new phase of price. Easy, right? Now, this is our first stage Kraken correlation, meaning that if we have only PSP, that is one stage Kraken correlation. Now, we are going to talk about two-stage Kraken correlation because you can have SMT and PSP at the same time. And if you do have that two-stage Kraken correlation, that is even much more confirmation for a new phase of price. Now, on this asset on the left, asset A, we have our C1, and then C2 sweeps the high of C1, closes back inside the range, but as a bullish candle. But assets B, we have our C1. First of all, the first Kraken correlation is when the asset B does not sweep the high of the C1. This asset sweeps it, but this asset does not. That is our first Kraken correlation because both assets were supposed to take out the high of C1 because they are correlated. But if we do not do that, that is our first Kraken correlation, which is SMT. But the second Kraken correlation, meaning that it gives it more confluence, it gives it more confirmation that this is actually a good SMT. This is going to give us a new phase of price is when we get a bearish closure on the second asset. First Kraken correlation is the SMT and then bullish closure. The second asset, first of all, we do not sweep the high of the C1. First Kraken correlation and then we close as a bearish candle. That is our second stage Kraken correlation, meaning that this is a very good signature for a new phase of price. And also to add a cherry on top, if you wanted to see which asset should you trade, is obviously you're going to trade the asset that is stronger. Now, if you're looking at these two assets, you may be wondering which asset is stronger. Obviously, the asset based on the SMT, the asset that does not go on the opposite direction, does not expand on the opposite direction, and also that it closes as a bearish candle, right? So it is much more likely for this asset to expand much faster than this because it closed as a bullish candle and also we swept the high of the previous candle, and also it is a little bit far from the target. So it makes sense to trade the assets B, which is our stronger asset, based on two things, SMT and PSP. Another type of a two-stage Kraken correlation is when the PSP gets created first and then the SMT, because on our first example, as you can see here, first we got the SMT and then the closure PSP, but on our second example, we have the first Kraken correlation is our PSP and then we get a SMT. That does not absolutely matter because it does not matter if you first get the SMT or PSP, as long as it is a Kraken correlation or two cracks in correlation, that is a confirmation for a new phase of price. Now here on our assets A, we have our C1 and then our C2 candle sweeps the high of the C1 and closes as a bullish candle. But our assets B does the same thing, sweeps the high of the C1, but the only difference is that this candle closes as a bearish candle. So that is our first Kraken correlation. Bullish closure, bearish closure. Now the second Kraken correlation happens when the asset A opens and then sweeps the high again. But this asset does not do it. So that is our second crack in correlation. And again, if you wanted to see which asset is stronger, again, you do the same thing. Which asset created the stronger signature on the first crack in correlation? Obviously, this was the bullish, which means it's weaker if you want to go for short. And this one, because it had a bearish closure, it is stronger. So you can trade this one. And also you can anticipate which asset is going to create the SMT. This asset, well, it makes sense for this to sweep the high and also to expand because it creates a smaller wick. But if this asset were to go all the way higher and sweep that high, then that would make this a very large wick, which is not ideal for an expansion candle. So this asset is our stronger asset. Now, another type of PSP is when we have a gap that creates a PSP or a PSP that creates a gap. Some people call it continuation PSP. Does not matter. Just get the concept. And this is when we have our, so a gap gets created from three candles, right? First candle, second candle, and then we have the third candle. The gap PSP happens when our third candle in a gap is a PSP, meaning it has a different closure. So we have the first candle in that confirms the gap, the second candle, and the third candle. Our third candle is a bullish candle on our asset A and a bearish candle on our asset B. That is our first Kraken correlation, which means that this is a PSP. Why? Because bearish closure, bullish closure. That by itself is enough for a Kraken correlation, but obviously you want one of the assets to tap into the gap, and you can already anticipate which asset is going to tap into the gap and which asset is not going to tap. Well, obviously this, because it has a bullish closure and it makes sense for this asset to open right here and then sweep the high or tap into the gap. But since this asset shows more momentum towards the downside, we know that this is not going to sweep the high of that candle. See? Now that is our two-stage Kraken correlation. First stage PSP, second stage SMT. If you want to work with me one-on-one and apply this in real chart on your own chart, I work with the traders one-on-one because the real progress is in the application of the knowledge and not in only in understanding. Link in the comment. Now we're going to go over some chart examples so you can see it and apply it in real charts. Okay, let's get to our first example. On our first example, we see that the price coming lower and then it starts expanding higher. But right here, before we tap into this relevant high, we get a PSP. So we were supposed to take out this high. But as you can see, instead of taking out this high, this candle closed as a reversal candle. We can consider this to be the manipulation, okay? Now, instead of taking out this high, it closes as a bearish candle. And when we look at the other assets, we can see that they closed as a bullish candle. So that is our first crack in correlation, meaning that we are getting a new phase of price. And the same way we get, if we were to get a SMT here, this would mean that we are reversing or getting a new phase of price. Right now, even though we do not have a SMT, but we do have a PSP, and that shows a Kraken correlation, meaning that we are going to get a new phase of price. That is the first step we can annotate. Now, what is our next step? And also, as you can see, the indicator or indicator right here shows that we have the PSP, even if you're not looking at all of the assets. Now, we got the PSP showing that we are going towards a new draw on liquidity. So what is our draw on liquidity? Very close to the current price action, we have this relevant low, and we're going to annotate that on all of the assets. Now we got our Kraken correlation. We do not need anything else. We can just trade based on this because we got the PSP. But the way these candles close, we can already anticipate which asset is going to sweep the high again or up into this level. I don't even have to tell you, you can tell yourself. And when you're looking at all of these candles right here on the last candle, the PSP candle, which one makes sense for it to open high, go take out the high, and then continue lower? Does it make sense for the NQ to do that? Obviously not, because look, we already put in the reversal candle, we have a bearish closure, and if we want expansion towards this low, we don't want it to open all the way high and then to come back. That is not what an expansion candle do. It opens maybe a little bit higher and then continues lower. But what about the ES? Does it make sense for the ES to, let's zoom in. Does it make sense for the, come on, for the ES to open high, take out that high, and then continue lower? Yes, it makes sense because look at the way this candle closes, very close to this level, right? And also this current candle's high is creating the equal highs. So it makes sense for the new candle to open high. And then because it is very close, it's not forming a large wick. So it can just continue lower, right? Just like that. So we can already anticipate, I mean, you can anticipate which candle or which asset is going to create the PSP or the SMT or the second stage cracking correlation. Now, with that idea in mind, and also the same thing applies for the YM, it can take out that high or it cannot, or it doesn't have to, because we already swept this high and close back inside the range. So it can go higher, but even if it does not, this is going to be a reversal candle. But if it does, that's also fine. But we already know which asset is the stronger asset. Obviously the the NQ, because it closed as a bearish candle. We know that it is not going to expand all the way higher, and also it is closer to our draw on liquidity. So we can anticipate that this is not going to create the high again, and also it can expand towards the draw on liquidity faster than the other assets. So let's play the next day, and boom. So NQ also, YM also ends up taking out the previous day's high, but fails to take out the main draw on liquidity, which was that. And ES, as I said, you could anticipate already that it's going to take out the high because it's too close. And also our stronger asset, which was the NQ, as you can see, reaches the draw on liquidity very easily. Now, before I tell you, and sometimes you guys ask what asset would I have traded, of course you know which asset you could have traded, obviously the NQ. And you knew which asset is going to be the middle asset. It was the ES, always ES, because right here, even though it takes out the high, but the wick is still smaller. And because the YM take out the high again, even though this candle had a large wick, if the previous candle has a large wick and the current candle wants to take out that high of the previous candle, this is going to create another large wick, which is not ideal for an expansion candle. And as you can see, it closed as a reversal candle. Now, another tip here before I move on to the next example, you can already tell if these assets are also going to reach to the same draw on liquidity. Yes, they do. For what reason? For this reason that we displaced this low with the leading assets, and also the other assets closed as a reversal candle. So we can expect the next candle to continue lower. And boom. All right, that is our first example. Let's move on to the next. Now, this example is very interesting because we're going to cover a few different things. Now, we can see that we have this price like getting run through. But right here we get a C2 reversal, closes, sweeps the high of the previous day, but closes as a reversal candle. But again, next day also sweeps the high and then again closes as a bearish candle. Now we are very close to this draw on liquidity, and if you're looking at the other assets, you can see that obviously the NQ is not the strongest asset, but the other assets already took out the relevant low. I mean, they are going towards this next one, but the level that we were looking for all the assets, they already got hit with these assets, or maybe this one right here. And now when this such a case app happens, and obviously we do not have any kind of PSP here, but we are going to talk about the continuation PSP. So here, as you can see, NQ is the weaker asset. Why? Because it opens high all the way up and takes out the high, so it creates a large wick. So it is weaker if you want to trade it lower. But these assets were stronger and they already took out the low. So let's drop down to the lower time frame. And you guys know that we have a concept strength switch, which I pointed out, I think, in the SMT lecture. If I did not, if you want me to make a lecture on that, the the strength switch, you can drop it in the comments. And if we get a few comments, then maybe I make a separate lecture for that as well. Now, we did not have any PSP on the daily, but we have a strength switch with not the strength switch, just the, what is it, the SMT, two-stage SMT with the daily time frame. Now, and since the other assets already took out the relevant low that we have, and this asset is closer to that level now, and as you can see right here at 2 p.m. we form a PSP candle, right? PSP candle, because we formed the reversal already here, and then we have the expansion. Right here we create a gap, and this candle that creates the gap is also a PSP. Let me, as you can see, this is a bullish closure, so that is our PSP candle. And when we get the PSP as a continuation or a gap PSP, now two things are going to happen. First is that we do not need another SMT here on the other assets. Obviously, we do not want this asset to open high, go and take out the high again, or tap into the gap. And this is another point that you know which asset or which candle, which gap is going to be unfilled. If you get a PSP and the PSP candle forms the gap and it's a bearish closure, you can anticipate which asset is going to tap into that and which asset is not going to tap into that. I see a lot of lectures saying that you can choose the gaps based on the, I don't know if it's on the beginning or the middle. No. If this idea is the behind the gap selection, if this candle is a bearish candle and is a PSP, we cannot expect. Sometimes it happens, but for the most of the time, we do not want to see this open high, go out, take out the high, and then continue lower. But for the assets, for the other asset, especially for this, it makes sense to do that. But there is no gap on that. We do not need it. So as you can see here, we want this, since we already have the Kraken correlation, we do not need another SMT. So we can expect this candle to just continue lower. And also it's a strength switch. This asset was stronger on the higher time frame. Now on the lower time frame, it gets weaker because it closes as a bullish candle. This asset gets stronger because it closes as a bearish candle. And also that's a PSP. So we can expect the next candle to open low and then take out this low. All right, now let's play the next candle and boom. As you can see, we open high, but we do not sweep or tap into the gap, just continue lower, even though this asset did not take out the high because we do not need another SMT, just PSP is enough for a continuation. And also the other point was that we could already tell this gap is not going to get filled. Now, two birds with one stone. All right, guys, that is it for this examples and this lecture. I hope you learned the thing I was trying to teach you. And if you liked the video and if you enjoy this kind of content, make sure to subscribe and drop your questions in the comment, and I will talk to you guys in the next lecture. Peace.